What's up, everyone? It's Karthik with MoneyVest. So the Bank of Japan Governor Ueda just ended his testimony in front of Parliament. So this right here was the catalyst from just a couple hours ago, mentioning that the markets, the financial markets remain quote unquote unstable and they are watching very, very carefully. So this right here was the entire session from earlier today. As I mentioned that today, Friday, August 23rd is going to be a very, very important day because not only do we have the governor of BOJ essentially giving us a testimony in front of Parliament, but also later today we've got Jerome Powell in front of the Jackson Hole Economic Symposium as well. So today we're going to be live later for a little bit longer, but this right here was a session earlier speaking in front of Parliament in Tokyo on August 23rd, 2024. So I've included for some subtitles here so we can listen to this 22-second clip. I'm not going to be playing any audio because again, it's going to be in Japanese and my Japanese is not that great. So I've got subtitles here that we can listen to. So we believe that the market continues to be in an unstable situation. So I'm just going to wait until the subtitles load up. So we believe that transparency needs to closely monitor the future direction of monetary easing with an extremely high degree of nervousness. There is no substitute for my basic attitude of adjusting the degree of monetary easing. So that was a little bit of a of course, of a hint of what exactly he said, but going over to everything. So if you take a look, Bank of Japan Chief Kazuo Ueda said Friday the financial markets remain unstable, adding he will watch their developments with extremely high vigilance after stocks showed volatile moves earlier in the month. And there is no change in our basic stance to adjust the degree of monetary easing. Regarding the possibility of future rate hikes or additional rate hikes, the governor said the BOJ will make a decision after cautiously and carefully examining the impacts of its latest rate hike in July on the economy and the prices. And Ueda's stance that the central bank will continue to seek monetary normalization sent the yen firmer against the US dollar Friday morning. So we did see a little bit, I think, of an increase in the yen against the US dollar. So US dollar against the Japanese yen is slightly down 22 basis points. And again, on the 5-minute chart, we're now down to 145.952 here. So we are slightly lower on the day as of this moment. So this right here around 9:40 p.m. Eastern. Yesterday we did drop about 70 basis points. This right here was a drop earlier in the morning. And right now we're starting to see a little bit of that recovery back up, but we are slightly down about 22 basis points for this currency pair. Moving forward, the yen had appreciated sharply after Ueda said on July 31st, after deciding on an interest rate hike, that rates could be raised further later this year. That was the overall unwinding of this carry trade that sparked the volatility spiking, the fear over in the US, everything kind of went berserk, as we already know. And Ueda expressed the view that the developments in the Japanese stock market, with the Nikkei also dropping significantly, biggest crash since the Black Monday of 1987, were caused by concerns over a potential US recession following weaker than expected economic data, which we obviously don't fully agree with because the US recession fears around the unemployment rate, which came out around that time, were just a bit of a add-on. It was kind of like oil to the fire because the bigger fire was, of course, the carry trade and the unwinding of that carry trade because of really, really low interest rates over in Japan. Also at the session, Finance Minister Shinichi Suzuki reiterated the government's position that the Japanese economy is not in a state of deflation, but warned of the possibility that it could come back. And if there is deflation, of course, the Japanese are going to lower interest rates again because, deflation is just as big of a risk as inflation is, right? If not, it could be worse because in a deflationary environment, there is literally no growth. There is no pricing power. There is no growth whatsoever. So I do understand why people do complain about inflation over in the US, but inflation is also one of the reasons why there is growth in the first place, as there are more goods and services being produced and prices continue to increase. Of course, they need to be at a stable level of 1% to 2% and not go crazy as what we have seen 7, 8, 9, 10%. But deflation is also a pretty big challenge with, of course, Japan economy dealing with that for several decades with the aging population, stagflation, lower productivity, all those things kind of combining and again contributing to the deflationary environment over in Japan. But if that were to return, they could once again start to lower interest rates at the moment. But as of right now, they are looking at potentially readiness to hike once again. and markets brace for Powell. So later today, in just about 6-7 hours, we're going to hear from Jerome Powell as well at the Jackson Hole Economic Symposium. So the yen rose on Friday as traders considered comments from BOJ Governor Ueda, who sought to calm lingering nerves after a surprise rate hike last month, while markets braced for a speech from the Federal Reserve Chairman Jerome Powell. So you got to be ready here. And this right here was from Vasu Menon, Managing Director of Investment Strategy at OCBC. He says, and I quote, his comments that market turbulence won't deter the BOJ from considering more rate hikes in the future, even if the next move isn't imminent. As long as the move in the dollar yen is orderly and gradual, this should not rattle the global markets as much as it did earlier in the month. So I think it's going to be a more of a stable, slow, and gradual process of looking at a lot of different data points and then deciding whether they need to raise interest rates again or not. But like I said, there is the world is moving on a different trajectory as Japan. So if you take a look at bar charts post here, global liquidity index, we go through these cycles where interest rates, of course, go up and down, right? So we go through global liquidity periods where there is liquidity coming out of the economy, world economy, and the markets, and then there's liquidity being injected into the system. And of course, we just went into a period where global liquidity was, of course, coming down. Why? Because it was a process of making credit conditions more tighter, with higher interest rates, as most central banks in the world continue to raise interest rates. And this right here is the forecast where a lot of central banks are easing up on the idea of liquidity and just the overall credit crunch that we have witnessed over the last couple of years. So as they continue to lower interest rates, that's really going to be opening up those doors for more liquidity and more sort of circulation of money moving forward, because borrowing is going to become more cheap, and it's, again, cost of borrowing is going to come down as lower interest rates continue to take place from major central banks. So we might be entering into another potential bullish period for a long-term cycle when it comes to global liquidity in the market. But at the same time, Japan, which is the third most liquid and most traded currency in the world after the USD and euro, is raising interest rates. So if that pair continues to appreciate against the yen continues to appreciate against the US dollar, that of course is going to put some impact on the unwinding of the carry trade, which again, nobody really knows how much of it is done or not. And money market funds are now sitting at well over $6.24 trillion. So record sums of cash sitting on the money market funds in the sidelines. So this number continues to balloon up to over $6 trillion even after this recent dip in the markets. We haven't really seen a lot of asset allocation here, and this is as of August 21st, 2024, so just a few days ago, and we're now sitting at record over $6.2 trillion in money market funds. And the US dollar is being used at over 48% in global payments, and the highest level in over a decade. But BRICS, of course, is also moving a little bit away from US dollar. Saudi Arabia, and again, BRIC nations, Brazil, Russia, India, China, all these countries are looking to move away from the US dollar, but we'll continue to see how successful that ends up being and what is going to be the end game with this currency battle, or currency crisis, I should say, that's happening all over the world. Because really, anybody who has the global reserve currency of the world definitely does have a little bit of an advantage of printing money. And again, everything is denominated in their own currency, thereby having a lot of demand for their currency, right? Because everybody needs to trade in their currency. So that's where we are, 40%, pretty significant number, almost half of global payments happening in USD. But that expectations for that is to decline or come down or decelerate moving forward, as again, there's a lot of geopolitical tensions and some other factors at play. Finally, this right here was a tweet from Canadian Prepper. Quite interesting. An interesting fact for you. In 1947, the British pound was 83% of global currency. Its peak by 1950, it was 59%, 1953, 47%, then 30%, then 7%, and today it is just about 2%. There were even wilder swings earlier in the century. Before the currency implodes, all flock to it as an economic safe haven, and the rise of the US dollar. This right here has been the rise of the US dollar, of course, is what we have talked about. But at the end of the day, I think it's really, really important for us to keep in mind that there are risks. There are risks related to the national debt, to the global debt, right, for the entire world, and not to mention the supremacy of the US dollar that continues to dominate the entire world. I discussed this in one of my previous videos. That is perhaps one of the 3 risks that I highlighted in that video, where things could get a little bit more interesting, right? Not really super bearish, but definitely interesting from an investment standpoint. And I gotta give a special shout out to orange juice as it's soaring to its highest price since May. As you already know, that orange juice is a pretty big deal in our community and within striking distance from their all-time highs. So a pretty massive move, over 4% in orange juice futures today. Orange juice, in fact, believe it or not, was actually one of the best performing assets over the last 4 years. If you come over to our trading view, and if I simply go over to orange juice, it's actually quite crazy. That's why we've been covering it on the channel. This right here is frozen orange juice futures. And if you come over to the monthly chart, take a look at where we are and at where we are coming from. This is quite literally the pandemic. Had you not done anything, simply bought orange juice futures, this has gone up over 422% with a very, very strong uptrend as it continues to move higher. So OJ for the win, and now you know why we cover orange juice on the channel so often, and we talk about it when we're going over our futures because it has been one of the best performing assets since 2020. I'm talking about it for over 4 years. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Happy investing. This is a little bit of a quick pre-update on what happened with the BOJ, and we'll be live again in a few hours covering Jerome Powell and the Jackson Hole Economic Symposium speech. Happy investing. I'll see you all in the next video.